There was a time when Americans expected their real income to go up by 3, 4, 5% per year. And the economy was growing at that rate. But it's been stagnant, actually, since the early 70s. And actually, I think it's declining now. It's not as bad. It doesn't look as bad as it could be, mainly because of debt and the dominance of the US dollar. In other words, from the point of view of the US as a whole, our major export since about 1980 hasn't been Boeings or IBMs or wheat. It's been dollars, quite frankly. And the standard of living in the US has been artificially propped up because the rest of the world has accepted trillions and trillions of these phony dollars, their fiat currency, and in return has shipped us Mercedes and Sonys and cocaine, all kinds of things in trade for paper money. That's coming to an end. And what's happened in the Ukraine recently has kind of been the catalyst, the turning point that's changed that, where I think all over the world now, people are starting to realize the dollar is a hot potato and the US government is actually bankrupt.
So this is important because we have to speculate as to what's going to happen, but the new world order, if you want to call it that, and how investors' strategies might shift in relation to this new world order.
That's why the rich have gotten richer in recent years at accelerating rates, while the poor have gotten poorer. That's going to accelerate too, because now finally, all this money printing, all this currency unit printing is starting to filter down from the financial markets, which have good inflation, benefiting the rich, to retail inflation, gasoline prices, food prices, rent prices. At this point, the US government is mainly financed by printing money. It used to be, remember, we'd borrow money from the nice Japanese and the nice Chinese, and they lent money to finance US government benefits, deficits. They don't do that. They're liquidating all their dollars. The only source of borrowing now available is the Federal Reserve.
Sure. The
US government sells its bonds to the Federal Reserve. The Fed credits its accounts at commercial banks with dollars. Count on inflation going a lot higher and the standard of living going a lot lower in the years to come. One of the guarantees for that, incidentally, is the fact that Washington, D.C. Is now controlled by, well, I hate to say, actual Bolsheviks, actual Jacobins. Well, they're not Jacobins and Bolsheviks, but the people in Washington.
Figuratively, of course. I don't think they're actual Bolsheviks.
No, not actually. But I'll say this, they share the same philosophy, the same economic and political outlook as the French Jacobins and the Russian Bolsheviks do. They really do. They believe in state control, much more government. And of course, as things get worse, the average American is going to say, do something, because the average American thinks that now that the government is the solution, not the problem, and they'll ask the government to do something. And of course, the government will do something. They love to do that. And it's almost always the wrong thing. So I'm really quite bearish. And in the markets, I'm in the futures markets, because I trade a lot of commodities, I'm generally short the S&P, short bonds, and I have been long gold and silver.
What is going on out there, peeps? There's a lot to cover in those statements made by Doug Casey. Doug Casey is the author of The Greater Depression, which is what we're going into. Many of the things he mentioned, I have brought up myself. That our country is being ran by a bunch of communists, that the US dollar is being killed, and that people should be investing into gold and silver, just to name a couple of things. Let's just be honest. The dollar is dead and our country is bankrupt. I've heard so many times in the world of NESARA, GESARA, or even in the 17th letter movement. What is that statement? Gold will kill the Fed. Well, it's not so much that gold is going to kill the Federal Reserve. It's the fact that the Federal Reserve is committing suicide and gold will be its replacement. So let's go ahead and lay out the plan for this because that's what's happening at the moment. Before I get started, though, do me a favor, hit that thumbs up button. If you're not a subscriber, please do so, because when you do, it helps out the channel, and I surely am grateful. Speaking of gold and silver, when you go to make your purchase of gold and silver, go check out our friends at Money Metals Exchange. The link is down below in the description. If you're a first-time buyer and you spend more than $100, use promo code Pimpy, P-I-M-P-Y, and they will send you a free half ounce of silver. Still, proven it several times that Money Metals has the most competitive prices. So they are who you should be turning to buy and own your own physical gold and silver. That's right, you can keep it in your house under your supervision. We're going to listen to Rafi Faber here. Rafi's really good. He monitors the markets. He's an analyst, and he's got some interesting things to say about the bankrupt Federal Reserve. Now, this is something that we've spoken about several times. I thought it was interesting that when Trump was in office, what did we hear? That the Treasury and the Federal Reserve merged? Well, there were some kind of actions taking place that gave the impression that they definitely merged. And what we saw was something unique. The Federal Reserve was taking on more and more debt. It was my opinion that Trump did that on purpose so that the Federal Reserve would take on so much debt and then he would turn around and bankrupt them. Yes, taking them out of business, and we would go back to controlling our own monies, not the Federal Reserve. How close are we to that? Oh, a lot closer than you know. The Federal Reserve's books are so saturated with debt that technically they are already bankrupt. So when you see this type of thing right here taking place, central banks are purchasing gold at a record highs. Why? What do you mean why? We know why. They know that the death of the fiat currency is coming. They also know if they don't buy enough gold or revalue gold and silver, they're going to be bankrupt. So either way, we win if you're gold and silver holders. That's why I always say, do as they do, not as they say. Look at James Turk says right here, technically the Federal Reserve is bankrupt because losses of 9.4 times is 35 billion of capital. There was an article that said that the central bank's insolvency confirmed by Reuters. So the Federal Reserve is already bankrupt. But it's not just here. This is why I know we're going back to the gold standard. You ready? Sierra Leone launches a redenomination currency to strengthen its value. Well, why do you have to strengthen your currency value? It's because it's losing value. So their currency is dying. Tumbling Japanese yen spells inflation. The Japanese yen is at a 2-decade low against US dollar. It is dying. The free fall of the rupee. So India's rupee is dying. In addition to that, so is the euros. Yes, the European market is about this close to being bankrupt and collapsing. Speaking of, the euro is following. The ECB intervention, probably a move. So the euro weakness in normal times would be welcome by an export-reliant bloc that has long struggled to meet 2% inflation. So at one time, they were a stronger currency to the US dollar. Then all of a sudden, it became equal to the dollar. And as of the 16th of July, 2022, the US dollar is now stronger than the euro. There are nations all around the world that are collapsing. Why? Because of the fiat dollar. China's currency just had its worst month ever. Their currency is collapsing. Pakistani rupee, in addition to India's rupee, collapsing. Malaysia, their currency is dropping. It's collapsing. Even cryptocurrencies have taken a huge hit. That is collapsing. Now, for me, my personal opinion is this is a staged event. This is to welcome in the New World Order, otherwise known as the World Economic Forum's Great Reset. That will be their excuse to push us into the central bank digital currency, which is what you don't want. But there is an alternative, the gold standard. The reason why governments around the world don't like the gold standard restricts their power. Yes, that means they have to have a budget that they pass yearly, and they can't just frivolously keep printing money like they're doing with the US dollar. They are restricted by the amount of gold that they have, depending on how much they revalue gold and silver. And they're going to revalue gold and silver. Let's listen to Rafi Faber here. He is a gentleman that is an analyst when it comes to precious metals, but he brings up a point that we should be aware of, and that is the Federal Reserve is bankrupt, and gold is going to be its replacement. Let's listen in.
Comes from Mermacan Capital's latest research paper that was released yesterday, July 13th, and it shows two lines. One of them is an exponential growth curve. And you see here the smooth curve, the light blue line, beginning in 1960, with overlaid the assets or the liabilities of the Federal Reserve, meaning the Fed's balance sheet. Now you see here how the Fed's balance sheet has to always catch up with the exponential growth curve, and right now we are already just about in the vertical stage here. Well, we see here that the Federal Reserve's liabilities or assets, interchangeable, travel off of the exponential growth curve here, and all of a sudden they have to compensate by jumping up in 2008, which is the financial crisis, obviously, and we bounce along the exponential growth curve here. And then here is quantitative tightening, the end of QE3 and the fall in the Fed's balance sheet. And right here is the apocalypse of September 2019. And as coincidence would have it, all of the COVID money printing got us right back onto the exponential growth curve.
Yeah, I love how Rafi said, what a coincidence. Right around this time, we had the coronavirus outbreak. It was an excuse for a lot of things, but it's funny how those things happen, huh?
And right now we see here this tiny little dot. That is the end of quantitative easing, or the latest quantitative easing, QE. And we are about to travel off of the exponential growth curve again. How long will that last? Not very long, and we're going to have to see another vertical spike in money printing, or everything is going to go bankrupt. And why is that? Very simply because debt grows and grows and grows, and the monetary base, the amount of dollars available to service that debt, is no longer growing. And so therefore overall leverage gets higher and higher and higher, and the bids for the remaining dollars go higher and higher, and everything is sold to get those dollars so you can keep servicing your debts, which includes gold and silver, which is what is happening now. However, only one of two things is going to happen from here. Either the central banks of the world, led by the Fed, are going to rescue the monetary system, the global monetary system, by printing a whole bunch more money, which they cannot stop doing, and gold and silver, especially silver, will explode, and silver will head to the 15-to-1 ratio of its monetary nature, or the Fed and the central banks of the world will give up. And there will be a rush to gold and silver anyway as panic sweeps the globe. Let's take it from Daniel Oliver of Mermacan Capital, the author of that chart I just showed you. He is one of the very few monetary analysts that I really look up to, and his words should be considered very carefully. Now, I talked about those two possibilities. Either the Fed prints or it doesn't print. Let's go over both those possibilities. Says Oliver, as a form of collateral, and this is what's happening now, gold and silver obviously gets sold to meet margin calls along with gold mining investments. So you have all these people with a bunch of debt that don't have enough dollars, and so they sell assets, or they sell short other assets in order to get dollars, because that's what they need to stay in business. That is the crunch. That is what is happening now. We are now seeing the familiar pattern. It continues playing out again. Costs are increasing, operating margins are tightening, gold and silver, and the miners are being sold off as the world heads into the next liquidity crunch. We know what comes next. The Fed must print, and gold miners and silver miners obviously will respond first and fastest, just as they did last time. And he adds, what if the Fed does not print? The chances of that are very small, but let's just take the possibility. Then the solvency of the Fed itself and the banks and the government come into question, and gold and silver price projections of $10,000 an ounce and a 15:1 ratio that would be about $500 an ounce become conservative.
Okay, a couple of things. You see where it says right here, then the solvency of the Fed. That means the bankruptcy, the end of it is done, gone. The Fed has gotten themselves in so much debt from buying our bonds and buying up other things that their balance sheets are now way higher than they have actually assets. What Rafi's talking about down here is the predictions for gold are at $10,000 an ounce, but Rafi's just being conservative, okay? So the solvency of the Fed is almost at this point unavoidable.
How is it that the solvency of the Fed itself comes into question? Because if the Fed does not print money to have debtors service their U.S. treasuries or mortgage-backed securities, and the value of those securities becomes zero, and the balance sheet becomes impaired, and therefore the unit of liability on that balance sheet, which is the dollar itself, dies. So if the Fed goes bankrupt, the dollar loses all value, and therefore they must print. They have no choice. Here's what really flirted me at Daniel Oliver's latest research note from yesterday. He agrees with me about the timing. It is coming up in the next few months. And how do we know this? He says, when the world loses confidence in the Western banking system, perhaps as soon as this winter, when Europe will face economic and political collapse because of the conflict with Russia, the Fed will be forced to print more and faster, and there will be runs on central banks. There are no liquid assets on these balance sheets that can be sold to support the currency. We know that Russia has just cut Germany off from its main gas line, and they say it's maintenance and they're going to put it back on in about 8 days from now. But we all know that they won't. This is Russia basically pulling the same trick it did on Napoleon and Hitler, scorched earth policy, cutting off the Europeans from all natural resources. However they do it, it's different technologically now. It's through a pipeline instead of actually burning their cities. But effectively, it's the same thing. This is scorched earth. Napoleon failed, Hitler failed, Germany and the rest of Europe will fail in strangling Russia. They're going to try, call it what you will, valiant, not valiant. I'm not commenting on the politics here. I'm just explaining what's going on. But Europe is teetering and it will fall. And then the dollar will be alone among fiat currencies until the banking system in the US also starts to teeter and the final printing round will begin. The slingshot is going to be spectacular. You just got to understand the business cycle and get through it. It's coming. If we go into some little bit of technicals here, we have junk premiums, junk silver premiums now pushing 27%, pretty much where they were at bear market bottom 2015 in November, December 2015. That was the record barring financial crisis. Obviously, 2020 was a monetary crisis from the COVID era, and 2008, obviously, the financial crisis then. We are now at levels of bear market bottom, and we still have a financial crisis ahead of us. Where our premiums going to go? They're going to go damn high. And on the delivery front, we have a continual drain in COMEX supplies. We are down to 62.7 million ounces, where the red line I drew over here. This is now, it looks like to be a 60% fall from the post-silver squeeze one highs. Silver is draining from the COMEX. People are taking advantage of the spectacular low spot price at these prices. We can expect the drain to continue. There's about 12,540 contracts worth of silver left for delivery, and it will keep falling in the weeks and months ahead. Price inflation has not peaked, and at these levels, we're going to start seeing some panic with people buying consumer goods that they don't necessarily need now, they need later, but they're going to buy now in order to get in front of the price inflation. Bloomberg admits that this whole experiment by conducting monetary policy through interest rate targeting rather than money supply targeting is a new thing that was only introduced in the 1990s. So maybe they're going to have to turn around and try to target money supply, but they can't do that either. The final point I want to make here is that the next printing round is coming, but it will not save asset prices. And I told you at the beginning of this video, I would explain to you exactly how I know that. First point, in order for money printing to stimulate the economy, meaning to raise asset prices, which people think means stimulating the economy, the money needs to be loaned out by the banks. Step 2, loaning it out at interest rates below the inflation rate makes no sense. Why would a bank loan out funds at, let's say, 3% or even 4%? Let's say the Fed raised interest rates by 200 basis points, 300 basis points at the end of July. And then we have interest rates, let's say 4 or 5%. Why would they loan funds out at 4 or 5% when the consumer price inflation rate is near 10%? It doesn't make any sense. So there is no reason for them to loan funds out, and therefore new money cannot go into asset prices. Where is it going? It is going into reverse repos. So my point 3, unless the Fed hikes overnight rates 1,000 basis points and only then prints money, new money should only blast into still more reverse repos. Finally, what will the new printing round accomplish? It will destroy any remaining confidence in the currency.
Which is exactly what we've been talking about. The fiat dollar is no good. Throughout history, there has never been a time in which a fiat dollar was successful. Every country that has turned to the fiat dollar system has failed, which is why we should go back to the gold standard. And most likely we are going to get there. So is gold going to end the Federal Reserve? Yeah, most likely it is. And it looks like we're well on our way unless they can force us into the central bank digital currency. And when they make that attempt, I need every single human being to rise up, raise hell, and refuse the central bank digital currency.
So there is a reason that reverse repos, that money printed during the COVID era, is still stuck at the Federal Reserve in something called reverse repos. That is when extra cash cannot be loaned out, so it is loaned right back to the Federal Reserve at interest. It is now at about $2.2 trillion and it has not fallen. That means there is nowhere else for all this money to go to. Why? Because it cannot be loaned out at rates above the rate of inflation. And that is not going to change, because the Fed is not going to hike 1,000 basis points at the end of the month. And therefore, the new printing round will come, but it will not stimulate asset prices. Instead, it will stimulate consumer prices. And at that point, the world will understand that the dollar's goose is cooked. No matter how well it is performing against the euro or the dollar index, or no matter where it is, it doesn't make a difference. The question you want to ask yourself over and over is, when the purchasing power for consumers of the dollar collapses, what asset are people going to chase? Banks are going to chase gold. They've done it for hundreds of years, for every financial crisis that has ever existed since gold became money 5,000 years ago. What asset is the public going to chase when they realize that the dollar can no longer buy anything that they need? It's primarily going to be silver. And as that happens, the ratio will fall to 15-1. It is hard to see that now, especially with the price action, but we've seen this before. We know what comes next. It is time to hang on tight, be smart, be calm, be collected, and understand that the end game is just around the corner.
Oh yes, the end game is around the corner. Back to the gold standard we go. We see Russia already making that move now. We see that China is making the same move. People need to go back to the gold standard, limit the power of the government, give the power and the wealth back to the people. That's exactly what the gold standard does. All right, we are almost there. So, will gold end the Federal Reserve? Yes, because the Federal Reserve has committed suicide. Anyways, let me know what you think. Leave a comment down below and I will come back and respond. That's it for now. I'll catch you later. I am out.